Level 1. The Gambler. It starts on a Tuesday evening after watching a 19-year-old on TikTok explain how he bought a Porsche by drawing two purple triangles on a screen. You download a broker app on your phone. You deposit $300, money you tell yourself you are completely fine with losing, which is a lie you have to tell yourself so your stomach stops hurting. You buy a random crypto token because the logo looks modern and someone on Reddit with an anime profile picture said it was going to the moon. 40 minutes later, the green line goes up. You are up $37. You immediately calculate that if you simply repeat this 12 times a day, you will be making more than your dentist by next Thursday. You do not know what market capitalization means. You do not know what a limit order is. You buy at the exact peak of a green candle because your brain equates green with safety and red with danger, which is the precise psychological wiring the market exists to exploit. 2 days later, a red candle wipes out 60% of your balance in 4 seconds. You stare at the screen. You feel a cold sensation in your chest that you have not felt since you dropped your phone face down on concrete in 7th grade. You do not sell. You hold it all the way to zero because selling would mean admitting you were wrong, and your ego costs $300. You tell your friends the market was manipulated. You deposit another $500. You have decided to become a trader. Level 2. The Chart Magician. You have discovered technical analysis. You no longer gamble. You believe you are doing science. You spend $80 a month on charting software. You buy a second monitor, then a third, because you have seen photos of trading desks and you believe screen area directly correlates with profitability. Your chart looks like a modern art painting by someone who hates geometry. You have Bollinger Bands, 3 moving averages, the Relative Strength Index, MACD, Fibonacci retracements, and a volume indicator all layered on top of each other until you can barely see the actual price. You wake up at 6 in the morning to trade the London Open. You drink 3 coffees before 8. You learn terms like liquidity sweeps, bearish divergence, and support and resistance, and you use them in casual conversations with people who only asked you to pass the salt. Your entire mood for the day is determined by a 5-minute candle. If the market goes your way, you are generous, charismatic, and deeply optimistic about humanity. If you get stopped out, you spend the next 4 hours sitting in silence, replaying the trade in your head, convincing yourself that your analysis was right and the market simply made a mistake. You are break-even at best. You make $2,000 in 3 weeks through sheer stress, and you lose $2,100 in 45 minutes because you took a high-leverage trade while sitting on the toilet at work. You realize you are not fighting institutions. You are fighting your own impatience, and your impatience has unlimited leverage. Level 3. The Risk Manager. Something breaks inside you, and for the first time, that is a good thing. You stop trying to predict where the price is going. You wipe the indicators off your screen. Your chart is now plain, black and white, and mostly empty. You trade 1 setup, maybe 2. You do not touch 10 different shitcoins a day. You trade the same asset at the exact same hour every morning like an assembly line worker. You calculate your position size before you even look at the entry price. You risk exactly 1% per trade. When a trade hits your stop loss, you close the laptop, make lunch, and feel nothing. The loss is no longer an emotional insult. It is simply the cost of doing business, like rent or electricity. You pass an evaluation for a funded trading account. Your first payout arrives, $1,200. It took 22 days of staring at charts, passing on 30 tempting setups, and taking 6 boring trades. You screenshot the payout, but you do not post it online. You have learned that the loudest people on the internet make their money selling courses about trading, not from trading itself. You are making money, but the romance is entirely gone. You thought trading was about freedom and excitement. You discover that profitable trading is one of the most boring, repetitive, and psychologically exhausting routines on earth. You sit alone in a room, pressing 2 buttons, managing statistical variance. Level 4. The Edge. You have survived 3 years. 95% of the people who started when you did have liquidated their accounts, uninstalled the apps, and gone back to complaining about their jobs. You understand now that edge is not a secret formula or an indicator. Edge is the discipline to do nothing 80% of the time. You sit at your desk for 4 hours, identify that the market conditions are choppy and unfavorable, close the screens without taking a single trade, and consider it a completely successful day. Your trading volume is 5 or 6 figures per position. This introduces a problem you did not anticipate: slippage and psychological weight. Losing $2,000 on a standard statistical loss feels different than losing $20, even if the percentage of your portfolio is identical. The math says it is the same. Your nervous system says it is a month of rent, vanishing in 60 seconds. Your friends think you sit around on a laptop making easy money. They ask you for tips at dinners. What coin should I buy right now? You look at them and tell them to buy an index fund and never look at a chart. They think you are gatekeeping. You are trying to save their mental health. You have built a system that generates cash, but you realize cash in an account does not equal peace of mind. The market never closes. Even when you have no open positions, the price is moving, and the temptation to participate is a permanent low-frequency hum in the back of your brain. Level 5. The Capitalist. You no longer call yourself a day trader. You call yourself a risk allocator. You spend less time looking at 5-minute charts and more time looking at macroeconomics, liquidity cycles, and treasury yields. You realize the ultimate goal of short-term trading is to make enough capital so that you never have to short-term trade again. You move your trading profits out of the market and into hard assets: real estate, cash-flowing businesses, index funds, boring things that do not have liquidation prices. You trade significantly less than you did at level 2 or 3, but your trades are larger, slower, and require almost zero daily screen time. You see a teenager on TikTok explaining how he bought a sports car by drawing triangles on a screen. You smile, not with anger or mockery, but with the quiet, tired recognition of someone who survived a war watching fresh recruits march towards the front line. You remember the bedroom with the $200 account, the panic attacks over $50 red candles, the 3-screen setup that cost more than your portfolio was worth. You realize the market was never a machine designed to make you rich. It was a mirror designed to show you every single flaw in your character: your greed, your fear, your impatience, and your ego, and charge you money for every lesson until you finally learn to listen.